Hey everyone, appreciate you all being here at USA Crypto Group for this AMA session. We have a project called StaynEarn with us. The mission is to disrupt the short-term rental market. So with that being said, I'd like to welcome VS from the team. VS, pleasure to have you here. If you can start out introducing yourself, talking about your team, and just giving us some insight into your background experience.
Great. Thank you, guys. Nice to be here. So my name is Vishal. We're a fully Doxxed team, so nothing to worry about there. We are product focused. We are also token focused. We've spent a little over 8 years in this space doing various things. We've built things, we've broken things, we've rebuilt things, we've sold things, we've invested in things, been through a number of, well, let's say most of the retail cycles that we've seen. We're a team of 10 right now. 6 of us have worked together for majority of those 8 years. Most of us, well, I'm not the engineer, but most of us are, I'd say 10x engineers at least. We're here now with a concept that we think is correct for this new coming cycle. What I mean by that is a little bit of a segue here, is that for the past year and a half, we were really whiteboarding with some obsession around RWA. Now, the issue with RWA for us was that all the attempts that were being made, we weren't really fans of. Normally, when you think about RWA, people, pigeonhole themselves into kind of taking loans or financial assets and then kind of segmenting them, kind of like mortgage-backed securities or some sort of compartmentalization or tranched, exposure, or they took a piece of real estate and they fractionalized it. Reality is nobody really cares about trading that. So whether you do it outside the reg perimeter, where interest may happen or not happen, you limit your scalability. If you do it inside the reg perimeter, forget about liquidity and forget about actually engaging people to an extent where there is a real value accrual from transacting, right? At least in this given day and age. So we said maybe perhaps we need to look at this completely differently. How would we tackle it? It took us some time, but we tried to coin the term RWS, real world services. And the thesis was simple. We simply wanted to go after high margin businesses and in effect tokenize that margin and redistribute more equitably such that the business can still be profitable on product. The business can still be profitable in a way where it doesn't have to align itself against its community of token holders and still kind of drive growth for the business and for the token going forward. And Binance is a perfect example for this, right? For us, because they have a product. They have a product and they make a lot of money in dollars. Then they take that and they go ahead and they buy, with their revenue, they buy this BNB token, right? And BNB gives you all kinds of utilities and so forth in terms of discounts or whatever. But it becomes a rewards mechanism, right? And that became quite key because as we created this and as we set ourselves up for this cycle, we said, well, in this cycle, we expect a lot of Web 2 to onboard to Web 3. In the last cycle, we didn't really see that. They kind of stopped short. People kind of got burned on various things and, alts and all that kind of stuff, but they got some exposure, right? Now, to handhold people from, casino trading of, shit coins to basically engaging in real products, we had to kind of create this intermediary, become an intermediary, and become this Web 2.5, right? And so we said, okay, so Web 2.5 implementation of disintermediating margin and creating more equitable stakeholdership. Sounds like a lot of crap, right? How does this work? And we said, well, okay, fine. The best thing to do is let's take a business tech that makes a lot of money, right? Makes a lot of margin. There's very few, right? Because they all just make revenue or users or whatever it is. Airbnb, though, makes a lot of money, 26% net income margin. And they make that money on an increasing basis over and over again. Why? Because it's price inelastic. We all pay it, right? We're all guilty. We go there, we go to the website, it's $1,000 booking. Here's $1,150, right? That's what they charge us. And then they'll double charge, double dip. And they'll charge the host as well. And then they'll sit on that fat margin and say, yep. And a lot of that will feed through the bottom line. And this is how challengers are born, right? And we're a challenger to say, we don't need that. We don't need 20%. What if you ate a lot less and gave more back to the people and you made the industry a bit more buoyant, right? And so we studied that and we said, is that opportunity really there? As we kind of, peeled back the layers of the issues, it became very evident that this industry was ripe for disruption. So that's how the idea of StaynEarn was born. And that's where we've kind of come to today.
Awesome, thanks. Thanks for that quick introduction there. Yeah, I mean, you guys are going after a 90 billion market industry, right? Which is your biggest competitor is Airbnb, and I think we all know, um, what is Airbnb and what they do, etc. And I love that. I love that. Actually, I love the fact that you kind of spoke on about eat less and give back more, and just really just eating a little, tighter margin, right? Where the business were a little bit tighter, the business model a little bit tighter as far as the margin go. So VS, so it seems like let's start. I'll go back to your because I did read a little summary about your background. Could we speak onto your background? Also, by the way, VS, I'm not sure if it's me, but sometimes you're kind of in and out, so I'm not sure where you're at right now. The signal is could be better, but you may if you can move to like a closer to the modem, or I can still make it
Uh,
out what you're saying, but it's like kind of in and out here and there.
oh, sorry about that. Just probably dealing with an internet issue, but I'm unaware of it. So I'm happy to repeat if anything kind of falls through the cracks. Just please let me know. Sorry about that.
Oh no, it's okay. Yeah, no, we heard you, but I believe that we can be better. Um, okay, so yeah, let's talk about your background experience, VS. And I know you guys sent us a summary about you as the founder. So you are the founder of the project, correct?
That's right. Yes.
Okay. Yeah, could we speak in your background experience? Because I always tell my community that I always invest, not necessarily the concept, the idea, but sometimes the people, the team that's behind it. So can we speak on some of the things that you have accomplished, not just in the crypto space, but also in real life, which is very extensive. And I think, yeah, can we speak on that a bit?
Yeah, sure. Why not? I'll walk you through that quickly. So in the old world, I was part of TradFi. I was an emerging markets derivatives trader for a little over 9 years. I did that at a number of banks, dovetailed at one of Europe's largest hedge funds called Brevan Howard. I was recruited by the founder, Alan Howard, to set up his first crypto business called Elwood Capital Management, which is there still today. It's one of the largest investors. It was kind of his independent arm to invest into it. We built out discretionary trading businesses, algorithmic trading businesses, venture. Um, I went on to then trade and found one of the largest Bitcoin options funds that I managed in 2018. We were trading 1 year volatility on Deribit when there weren't any hedging tools available. We set up OTC guidelines for how people would trade options and what settlements would look like. So we were quite involved in the derivative space for some time. After that, I took a bit of a break, and I was approached to set up a centralized exchange, derivatives exchange, which was modeled after the Chicago Mercantile Exchange. There were some nuances there, what we called implied order books. We built that out in about 9 months, and we ended up selling the IP to one of the investors. We've dabbled in DeFi space for various things. I've invested personally in various things, and to just to kind of give a little pointer there, the StaynEarn was completely self-funded, and we didn't plan on raising any capital whatsoever. It's just that about 4 months ago, we were speaking to one of our friends, two of our friends. One of them is the founder of Polygon, Sandeep, and another one, also, one of the senior guys at Polygon. They're like, "We love the idea. Can we get in on it?" And we're like, "Well, I don't know, maybe yes." And so they wrote some checks just to kind of, have skin in the game, and kind of, say, okay, we're with you. And then they were open to token terms. And I'm like, look, this is not going to be any sort of VC coin or VC project, because, the market will probably scoff at that. So, whenever we launch the token, you're going to get locked up for a year. You're not getting anything right away. And then after that, I'll let you invest over a year. They said, fine, right? Because they saw the potential in the product. They saw the potential in the project itself. And so we've been around the block. We've done various things. Our understanding is markets. And believe it or not, building something like this has a tremendous onus on us for understanding supply and demand and understanding how to get people to the table and how to get people to interact, right? Because you can build a phenomenal product, but if you don't have buyers and you don't have sellers, and buyers and sellers aren't doing deals, then you're not making money. And so building marketplaces is something that we have a little bit of experience with. previously in my old life, I'll give you an idea. I built a diamond business, and we basically were going to refiners out of India and creating drop shipping arrangements out of Belgium to kind of bring down margin. So margin reduction tools are something that we've kind of created and worked with before. And we sold that business previously as well. So these things drive us. We see opportunity where people are gluttonous, inappropriately so, and this kind of just struck us, on the wrong side of things.
Nice. I mean, it's very obvious that you have an extensive experience in real life, not just real life, but also in crypto space as well. That's incredible. That's incredible. Amazing background. All right. How do you say your name? Vishal? Am I
Yeah.
pronouncing it correctly?
Yes.
Okay, Vishal. Yeah, I mean, obviously you guys chose the rental market to go after, and like kind of mentioned earlier there, 90 billion around their market. It's a huge market. And I mean, this is like you said there, right? RWS, real world service. I never heard of that before. Looks like you guys kind of coined that term there. Um, yeah, I mean, 90 billion, that's the big industry. And what's beautiful about this concept is that we know that it's existed, right? It's existed right now, right? It's proven the concept works. And you guys just pretty much improve it and take it to the Web3. And like you said there, eat less and give more back with that business model. So currently right now, are you guys going through a race right now or?
So we're not really raising, right? So what we're doing is we're just going to launch it, right? So our product itself, the entire marketplace, is expected in Q1. The Rev token is due to be live in about a week. Now, here's the funny thing. So, we spoke about the two people that came in on this, right? And known quantities in the space. You could do your research. It's public domain, public knowledge. It's articles are out there. They came in at around an 11 million FDV, right? And I said to them, great. I'm not trying to screw you, but I'm going to launch this at 5. Why? Because a lot of times when you have a VC coin come to the market, people are like, well, what's my multiple on what I invested? What does it matter? We're building a product. You believe in the product. You know we're going to deliver, right? Let retail get in. Let people get in. Let people feel like they're making money on something, right? And so when this coin launches, it's going to be around 5. It's going to be about half of that, right? Because at the end of the day, the valuation is not going to matter so much, as much as, us creating community by getting people that believe in the ownership, believe in the value proposition, right? And are zealous about their ownership. They're like that becomes important for us, right? That where the commitment kind of creates itself. And so that's a deliberate strategy we're doing. Normally you wouldn't see that. I mean, today we had, a DEX, launch at like, I think what, like a $3-4 billion FTV. What's the value prop there? Is that what you want to touch, right? If we're going after a competitor that's $90 billion, right? Whatever, give or take in any given market condition, where there's tremendous opportunity and we're launching at 5 million, that's a lot of opportunity, right? Like people should have that opportunity. They should have the ability to understand what's going on. The white paper is extensive. You can go through the detail. The maths are there. We've edge case tested everything. So for a product, right, where we have full licensing, right? We're licensed by the DED to operate StaynEarn here with the UAE at the moment, right? We have a legal-led process. There's legal opinions out about this token as well. We have a pedigree for delivering. We have known backers that wanted to get in because they saw the value and don't care how we're going to position this in the market, in terms of token out of the gates. Like that should breed confidence, right? And that's what we want, right? And so that's why we're saying, okay, well, given all those things, we launch at 5. Well, you do the maths, right? You weigh the scales and you figure out, if there's value proposition there. If you don't think it's there, if you don't, it's not there, right? That's not for me to say. I'm not giving investment advice. But what I'm saying is that, we make it fairly obvious. And the idea still, that's a downstream stemming from what I just alluded to earlier, which is this eat less, give more, right? Because you could still be profitable. You could still make a crap load of money and you can make a lot of people happy. And I think, a lot of times you forget about that third element. And when you forget about that third element, that's when you ostracize your communities and you kind of shoot yourself in the foot, right? But if you do things correctly and you do it with the idea that everybody benefits, then sky's the limit. So we try to kind of look through those lenses every time.
Right. Yeah, I mean, if you look at the business model of the Airbnb right now, right, you have the guest and the host, right, and Airbnb just takes pretty much all the money, right? So there isn't really a business model where it gives back to I guess the people involved in the ecosystem or in the business. So let's dive deep now. You guys are gonna try to change that up by incentivizing by using a percent of the revenue, and you guys gonna use that to purchase the reward tokens and give back to the stakeholders. Uh, let's dive deeper into that. Let's dive deep into that business model and why you think that's gonna. I guess it's already setting. I mean, differentiate that from Airbnb already, but how you think it's gonna, I guess, sustain the business, and it's gonna be a success for the business as well.
Yeah, of course. So when we look at the Airbnb model, right, let's just walk through an example. Examples are the best way to learn for us, right? So imagine you make $1,000 booking, right? And you go to hit the pay button, right? You're going to get charged $1,150. That's modus operandi for them. That is what they're going to do, right? On the same time, they double dip, right? And this is where the greed kind of starts showing, right? They're going to go to the host and they're going to charge them between, 3 to 10%, right? So let's just say they charge 5%. So on an $1,150 booking, they're making $200. And you're like, that's a lot of money for doing what, right? And then the add-on services, all that kind of stuff, right? In our particular case, let's assume there's $1,000 booking. Okay, there's $1,000 booking. First things first, that entire $1,000 is going to the host. And that's part of our incentive mechanism. We're not charging the host, right? And this is how we're getting inventory as well. We've actually, we're garnering interest. We're getting people to sign up and such, and then come back to the strategy around that in a second. But the point is that we don't charge the host, if they meet some tiny commitments, and again, we can speak to that in a second. But staying on topic of how we're reducing those margins, we go, we still take $1,150 from the user, okay? We still take that $150 profit, but then we take 25% of that, and we are going ahead and buying rev in the market. Now, we bought $37.50 worth of rev in that particular booking. Now that's distributed. That's distributed amongst the person who made the booking, amongst the host who was booked, but also all the other hosts that are actually publishing inventory on the platform. Obviously, the ratio is different. That's in the white paper, and you'll see how it kind of goes through. It also goes to the stakers, right? So if you're part of that ecosystem, you benefit, right? So if you're a host and you have inventory, but you're not getting booked for whatever reason, we don't penalize you like other platforms. You actually gain from us, right? That becomes important. Now, as part of the person who kind of made the booking, you're obviously going to get a lion's share of this, right? So you get something. So let's say, imagine you got like, $25 worth of ref token. Okay. Now, for a second, let's step back and imagine you didn't make this booking through StaynEarn. You made it through a different website like Expedia or one of those top cash or discount websites, right? Because some people ask me, hey, are you a discount token? Are you a cashback token? No, we're not, right? Because in those instances where you had a cashback or a discount incentive, imagine you got 2.5% back on your $1,000 booking. You got $25. Great. Okay. You come back 5 years later, you still got $25 in your account. Now, in StaynEarn's instance, you got $25 of rev. Let's assume you do nothing else for a couple of years, right? But the platform grows, which means that on every transaction, StaynEarn's in the market buying this token, okay? Ceteris paribus, so meaning that, everything else being equal or whatever, you could come back 5 years from now, and that $25 could be worth 25 grand. Because we've just been buying the bloody token, right? We have to. By design. If the platform is growing from a 5 million FTV to say a 10 billion FTV, it's going to be worth way more than 25. The point is that you get to participate in the upside. It's an engineering that exercise that we have to do, right? Because it's effectively a margin redistribution, and that's the key there, right? You get to participate in growth, and that's where the giving part comes, because those mechanics allow for that, and so that's kind of like the gist of the operation.
And now, are you guys dedicating 25% of the revenue, correct? And to buy the reward tokens and kick back to the investors or the stakeholders, correct?
That's right. All stakeholders. Yeah.
Okay. Now, so I'm assuming that is based on in proportion to what they hold, right?
in proportion to what they hold. As in, if you're a first-time user, no, there's a so in the white paper you'll see per transaction, on any given transaction, how much flows to the person who made the booking and the person who's the host and everybody else, to the people that are time boxing, which is another word for staking. You'll see those distributions there. So it's not how much you already hold. It's all about how much is actually flowing to you as a result of that transaction. It's about the size of the transaction and the frequency of transactions.
And I'm talking about the 25% that you guys going to be purchasing, and it's going to kick them back to the investors, right? To the stakeholders.
So when we say stakeholders, the stakeholders are by stakeholders here we mean everybody who has a vested interest, right? And that means the person who made the booking. So on our platform, the stakeholders are the person who makes the booking, the person who is time boxing, the host that got booked, and every other host that exists on the platform.
I see. Okay.
Those are the
Okay.
five
So
categories. Yeah.
Oh, okay. So okay. I thought was anyone who bought into the tokens and has a token. Uh, okay. So I mean, you guys will also have a token, right? Correct? That can be bought
So
on
this is
the.
yeah, so this is the token. So this is the Rev token. So what will happen is that so with that 37.5 bucks, we're going into the market. We're going to a decentralized market, and we're going to be buying it. You'll see our wallet. You'll see it interact, right? And I'm using this example, 37.5 bucks, right? But imagine times 100, times 1,000, whatever it is. Like we're doing this on on an operational basis, acquiring that from the markets and putting it back onto our platform. Right. And what's happening is people are able to, and when you get this token, whoever you are on the platform, whatever it is, you're able to do what you want with it. So if you're in the market, right, and you're operating and StaynEarn has to come in and buy, well, so imagine this, right? Imagine you're not even a user of the platform, but you believe that the platform could grow tremendously, right? Do you buy the token now in terms of, risk reward payoff, or do you buy it much later? You buy it now because it's dirt cheap, right? Because the point is that we're there every single time to kind of, so if the platform grows, even if you're not participating, you benefit from the fact that, we have to buy, like we have no choice. So that's the idea.
I see. Okay, and let's say if I was to host, let's say, a property, and I can definitely now I can use USD. Let's say I was a guest. Let's say I want to go rent a property. Let's walk through that scenario. If I want to go rent a property, let's say in Dubai, which I believe that a location that you guys can be launching first, go to market first. So if I was to want to go rent a space, do a rental in Dubai, walk me through the process. Can I use USD? Can I use or do I need to use the revenue or your token to make the rental?
No, you use dollars, and then here's a key part of our thesis, right? Is that who's the biggest audience here? The biggest audience here is Web 2. It's not Web 3, right? And kind of alludes to what I spoke to earlier in terms of onboarding Web 2 to Web 3. And as such, we're not actually reinventing the wheel, right? So imagine you close your eyes and imagine an Airbnb booking pages in front of you. So you have, below the header some text that has a title. You have the big central picture, and you have some pictures next to it that you can scroll through, some description below. And on the right-hand side, you've got this panel for booking, right? That has the dates, the nights, and the booking button, right? And you're able to see that in your head. You're able to envision what I'm saying because you've done it so many times, right? So this has been effectively commoditized. This vision of this layout is supposed to be. StaynEarn is going to have something very similar, right? So when you come to the platform, you're going to be able to do the same exact thing. You're going to be able to make that booking using a credit or debit card, just like you normally would. We're partnered with a regulated payment services provider, right? So your payment goes through normally. Now, you may be the third or fourth time on the platform, and you may have Rev. If you have it, it sits in your account. You see it. It just says, oh, you have Rev. This is the approximate dollar value. Do you want to redeem this? Okay. Do you want to see the chart of what Rev looks like? Okay. You're not obligated to use it. You can use it at any given point in time you want to, right? And that's the beauty of it. So we make everything familiar, and then add this subtle component of a real-time pricing for a reward point that is redeemable at any given point in time on the platform for anything that you could possibly want, whether it's a booking. And I say anything you possibly want because right now, V1, V1.1, 0.1.1.1 is all going to be about, fine, the initial properties and stuff. But there's downstream services. You want a car ride to the airport? You want to book a safari? Do you want to, have a dining experience? All these sort of things are redeemable. Anything through the platform is redeemable with Rev. Just because you don't have it right away doesn't mean that you're not able to. You earn it. You earn it. You can use it.
Correct. Okay. Now let's talk about your tokenomics structure. Now, as you stated there, so 25% of the revenue is going to be going back into buying the Rev token and kicking back to the stakeholders. Now, can we go over what is considered as your stakeholders again in the project? So who's qualified for that 25% revenue?
Yeah. So you will see that there's a diagram in the white paper that shows the entire distribution, right? But it will be the person who's made the booking, the host that's gotten booked, those that are time boxing, which is just a fancy word for stakeholders. For staking, right? So if you have Rev on the platform and you don't want to use it, but you want to stake it, you can, right? And then there are all the other people that are basically showing inventory or host on the platform. That those are the people that will get it. Those are that's the distribution mechanism for everybody.
But for the people who bought into the tokens, that will not qualify for the 25%, correct?
No, you have to be an active user on the platform, right? The benefit to the person who's buying the token is that we're always buying the token. It's like me saying, well, there's a flow that you got to buy it, right? Sort of thing. So yeah, but there's no way for us to kind of, at this juncture on the StaynEarn platform, we would not be able to reward somebody who simply owns the token. That can be done on simply a staking mechanism that we could just create a simple DEX for. That's something different, right? But that is very easy. But this is from dollar revenue that's coming, the dollar revenue, and we're distributing this to the people that are kind of engaging the platform. And there's an important distinction to be made here, right? If somebody buys a token, right, and you give them a staking reward in token, right, what are you doing? You're tilting. You're basically borrowing their future dumping. That's what you're doing, right? That's what staking is. We'll give you more of it, right? Because at the end of the day, those people are going to dollarize. And then that's okay. That's completely fine. But you have to understand that that's the risk, right? Why this model is extremely sound is because we are a dollar positive revenue, right? So that, if we take that 15% and we take away 25% of that, we've still got 11.25% of revenue in dollars, right? And what we're doing is we're taking that 25% of that 3.75%, and we're turning it into token, we're giving it to people, right? We're giving it to them, but it's already been dollarized before. So if there needs to be re-dollarized, because we bought from the market and you give it back to us to sell into the market, the net impact is zero. When somebody stakes, like they bought it on a DEX and they just stake it, and they say, and you just give them an emission over time, you have to come up with the dollars to support the market. And this is why projects break. This is why projects crack. We've seen them all that, we've seen this happen time and again. Oh, it's a great staking deal. It's greater fool theory. That's what it is. And it works so long as you can kind of keep increasing, right? And you can increase, some break early, some break at, 20 billion. And so, we've seen all of those happen, right? So staking is somehow always been accepted as a bona fide way of ensuring everybody's interest. But when you actually work through the market motions, you realize that, to support staking yield, the project has to continually justify its higher valuation, or people will just simply sell, right? And so, that becomes quite key. So yes, there is a distribution, but it's made from dollars into the tokens to give to the people. And if they want to sell, it doesn't matter the price, because we'll always have a buyer of last resort.
Yeah, I mean that's actually a great way to put it. Just because, like you mentioned there, you're actually using USD to buy into the token, right? So it doesn't really affect the chart, because once you buy to the token, you ultimately increases the chart, right? So let's say if you have those tokens, people end up selling it. I mean, it's going to go. Let's say everybody sells it, immediately. It's going to go back exactly to where you initially bought it at. So actually, that's a good example there. Yeah, sounds
Yeah,
pretty
so
good. I
it
mean,
can't go lower than. Yeah.
exactly. Can I go lower than where you initially bought it at? So yeah, no, I think I definitely can see that strategy there. So right now you guys are planning to launch over in Dubai and in the UK. As far as the real world project goes, let's talk more in depth into the regulations because I think that seems to be one of the biggest concerns, especially for the people in US. Could we elaborate on that a little bit?
Yeah, so our launch is in Dubai. We are licensed by the DED for StaynEarn. The issuer of the token, there's a legal structure around it as to where they are based, and how Rev token will be integrated. It's a legal-led process. We spent countless legal hours making sure that this is doable in the way it's supposed to be, and it is, which is why we have confidence in the green light. There's opinions written about it. There's various things coming from law firms. This is not something that we're kind of just guessing. The reason it works is because of the natural utility, is because also of the rewards mechanism, its failure of Howie, and failure, I mean, as I'm not qualifying under Howie. And so there's various things that kind of give it that tailwind, which is great. The UK framework, the UK is the next, at the moment, the next desirable location for corporate rollout. They are actually on the precipice of launching a framework in early 2025. We don't necessarily know yet what it is. The FCA has been working on it for some time. They have been usually quite open to this type of model historically. It would have actually been fine under, say 2022, 2023 regulations as well. It could kind of, it works, and it's a very popular destination. So when we actually look at destinations, it's not simply about regs. It's we have to see, okay, is there a tourist funnel there? Are there high margins there in those tourist funnels? And then do the regs permit it, right? And obviously the last one is an important consideration. So the UK becomes one. Japan is another one, right? US is trickier, as we all know. We're actually kind of all in waiting mode to see how the US opens up to this. We're quite confident, especially because we've erred on the side of being so utility-like that it really, because there's no pre-sale, like in the sense that like we've not raised, we're not going to the market and be like, hey guys, we want to raise money. Do you want to buy this? That would be an investment contract. We haven't done that, right? And so we've erred, very cautiously here. And as a result, that it'll be fine. I mean, if the product goes live in the US, which would be a huge win, that this thing catches fire, but very quickly. It catches fire without it, I think. But obviously, just the size of that market would be huge. But the reality is that the regs there are unclear at the moment, but moving in the right direction, or there's indications that everything's moving in the right direction. So that's our stance. But the globe is the world is pretty big. I mean, when you think about opportunities, Dubai itself, by the end of next calendar year, is expected to have about over 26,000 short-term rental properties. Hotel prices have increased so much that people are actually kind of pivoting this way to be like, okay, what can I Airbnb? Which is huge for us, right? And this is all about marketing, and we can kind of go into that a little bit later. But you have about 19 million people flowing through Dubai International in terms of tourism every year. That number is increasing. It's been increasing for the last 2 years, and quite heavily as well. So it lends itself very well to kind of do well. And it's not that we work with a Dubai only framework, but we're big believers, having made mistakes in the past as well, that the best way to build a business is not simply become the jack of all trades, but focus, right? Focus on delivering here. You deliver here and have your blitz scale strategy ready to go if it works, right? Or be able to calibrate it such that you're able to still blitz scale with the tweaks that you need to. So that's the key.
And you said you have the registration and licensing over in the UAE already, which is the initial market that you guys are going to be launching. So that's all in place already, correct?
Yes, we are licensed by the DED. Yes.
Oh, nice, nice. Okay. How many properties will you be expecting to have at launch, you think?
Yeah, so we're expecting basically between 500 to 1,000 properties to launch with. That number might be a lot higher. The reason I say that is because what we are doing is we're not going to the average mom and pop, right? We're not going to the average individual host and saying, hey, do you want to become a host? Now, part of that reason is to do with the history of the space, right? And so to kind of just quickly walk through that, and this speaks to our moat as well in a way, right? What's happened historically is when Airbnb first came around, mom and pops that had one or two properties would be like, oh yeah, hey, I want to be on Airbnb, right? And then they would kind of manage that stuff on Excel or some combination of spreadsheets, right? And over time, as number of properties under ownership increased, they needed something a bit more sophisticated. So they outsourced that to property managers, said, hey, you take your cut, whatever it is, I don't care, you manage it for me. I've got like 5 properties. And then the property managers started saying to other people, we'll do it for you as well, right? And these property managers, what we call VRMCs, vacation rental management companies, started having larger inventories, 50 plus on average. And as a result, Excel wasn't cutting it for them anymore. They needed to have more sophisticated software. So they said, well, we need portfolio management systems. And then they're like, well, okay, but we want to publish on Expedia, Vrbo, Hotels.com. How do we ensure we don't get double bookings? There's dynamic pricing over holidays, effective tax management software, whatever it is. And so channel management came on top of portfolio management, the portfolio management systems. And these integrated pieces of software started running property managers, right? But then a lot of these spawned out very quickly. So what happened then is that a lot of property managers pigeonholed themselves into using just 1 or 2 systems, or just maybe one system, because they wanted everything to be good, right? So when you go to a property manager and you say, hey, why don't you sign up for StaynEarn? They'll be like, well, I manage everything through a single piece of software. So what we did is we went upstream. We went through the property, the PMSs. We went to the CMs and basically said, we struck commercial deals to actually integrate. So now, when there's probably 4 to 6 bulge bracket PMS systems there, right? So we have a few conversations ongoing, but one we're integrating already because we struck a commercial deal whereby a property manager simply who's so used to using just one piece of software, when they click down on their portfolio management system and they say, hey, broadcast to Airbnb, Expedia, Vrbo, StaynEarn will be there as well. And they simply just have to click a button and everything kind of broadcasts, right? Which is quite key. And so the reason we love this is because it allows us to leverage, right? When I have to go to an average mom and pop and say, hey, why don't you come and advertise? Well, no, it's a lot of headache for what? A little bit of money? If that is, the more individualistic it gets, the more problems there are, right? But in a particular case where we have, a property manager with 100 properties, we simply say, hey, we've got this for you. We're going to roll out the red carpet. We've got a dedicated person who's going to manage all of this for you because it makes sense for us, right? We're managing a portfolio of 100, right? And we know what to do in that particular case and then do the hand holding in that process. So we cater to hosts that are property managers. We don't necessarily cater at the moment to individual hosts, and we don't see a business case for it yet. So that becomes, a key part of the equation.
Yeah, sounds great there. Now your TGE, that's slated for Q2, correct? So that's in a few months away.
No. Sorry. So I don't know if that was misconveyed. Apologies if that was the case. So the product is going to be Q1. The token is due to go live in about a week.
In a week?
So we're on the circuit now. We are launching pre-product. We think it makes sense because we've got enough updates, we've got enough MVPs, we've got enough stuff that we can speak about, showcase, and highlight. And we think this is the right time in the market where people are value hunting, right? I mean, and we're launching, let's put this in perspective. We're licensed, registered with the DED. We have a team that's delivered historically. We understand the market. We have, onboarding of properties. We have the tech solution. We self-funded the whole thing, only took on capital from very well-known investors because they wanted a piece of it at an 11 million FTV. But we're launching this at a 5 million FTV, roughly, in a week. Why? Because we want retail to participate, right? And so people can kind of then make their own assessments as to what they want to do. But the idea here is that we're going to do it in a week because we think, if they're value hunters, then, there should be something to hunt. And it shouldn't have to be a meme necessarily to figure out if it has any sort of value accrual to it. So, back to the good old arithmetic to say, hey, does this kind of make sense? Do the scales weigh, in terms of opportunity here. So yeah, roughly a week.
Yeah, so that's in the week. Yeah, definitely. I think because the banner that you guys sent to us there, I think the information there is incorrect. So I was a little confused there because on there it has a few rounds on there as well. So okay, so you guys went ahead and funded yourself. You guys did raise some money privately, and that's going to be launching. The TG is next week, correct?
Yes, so yes, in about a week, this token should be live.
Okay, okay. Well, that's good to know. That's good to know. Yeah, definitely keep us in the loop so that way we can post the launch day in our group as well. Okay, now that all makes sense now. Okay, because the information I was given, it's and I was a little confused there for a second there. Okay, sounds good. Now, now you guys been working this for at least 8 months in the project, and you guys have funded everything yourself to date, with a little bit of money. Now, when you say a little bit of money, what does that entail? And with the people who invested into the money, whatever the round or private round, what do they have also vesting period?
Yeah, so no, fair enough. So I'll tell you the history of this, right? So this is an idea we came up with in, say, between third and fourth quarter of 2022, right? We started kind of figuring out, hey, how we're doing this. I funded it. We put the team together. We got everybody back together. We started going with it. And then in July, roughly speaking, we were speaking to some of our friends, and as I mentioned before, the founders of Polygon, right? So Sandeep, and then one of the other senior guys, they looked at this and they said, "We love the idea. We want a piece of it." And I'm like, "Well, it's not for sale. We're not doing anything yet. But like, we want to be involved. But we want to be involved. We're friends. Like, it makes sense. We think, this you're gonna kill it on this. What do we do?" We literally made up a number and we said, "Okay, fine, 11 million FTB. I like 11, the number, right?" And we limited the investment to 800K between various entities or whatever it is. But I said to them, I was like, look, I'm not going to let this be a VC project because, if that's the case, then, it probably does more damage than not because, then it's just about shilling it as high as you can. That's not the idea here. We want to be more organic, right? Which means that I'm locking you for a year from the moment this token goes live. So you're not getting anything, nothing for a year. And then after that, you're getting, over the course of 12 months, you're going to get, your even distribution. They said, fine, that's okay. They believe in the product, right? And so that was completely fine with them. And to the point that I'm making is that, we'd raised at 11. And, when I said to them, we're not launching at 11, we're going to launch at 5, it's like, well, why? We're launching at 5 because I want people to have a piece, right? The whole idea is, if people participate at a lower valuation and they think they got a better deal than a VC, it does a lot of psychological good, right? For people to feel good about something, to feel ownership about something, that's something they're not going to flip, something that they feel like has an upside that they can retain to build a community. Those effects are always underappreciated in the market. And so we were able to convince them. And then this is why we're doing what we're doing. So those are the numbers. That's how it kind of panned out, and that's where we're at.
Okay, so launching around 5 million market cap, instead of initially 12 million market cap. Now, what would you say,
FTV of 5,
like,
not just market cap.
fully fully diluted value? Now, so assuming that you're gonna have, but you will have some tokens locked up, correct? As well, is that what you're saying?
Yeah. So we're gonna lock it up. Like a week later, we're gonna basically announce what we're locking up. But it's like the team's getting locked up. Everything's gonna get locked up, right? So following from the same ethos that I've been conveying, all those things are gonna happen. We'll make the decisions. And the good thing is everything stays decentralized, so everybody will know the wallets. Everybody will see everything, and I'd rather them see that anyways, right? So we're gonna lock up a lot of it anyways. The market cap will collapse in the sense that on paper, be it not the price will collapse, but the market cap collapses because we're going to lock up a lot of it. The FTV stays the same.
And you mentioned a year, Cliff, so that it's pretty much locked up for at least a year. So
And
that's
those are
actually
just
that's
those investors. Those are just those
okay.
investors, and the team will probably lock up for a little bit longer.
Okay. Oh wow. Okay. Okay. And how would be the what would you say the LP ratio to the market cap will be? Pretty healthy, you think, or?
We're expecting it to be. We've spoken to some DEX market makers who are going to lead this initiative for us. It'll be, they're dynamic. They get it. They understand, they understand the story, which is the most important thing. They understand, how we want to do this in terms of, doing right by all counterparties. So it should be healthy. It's not as if it's going to be, disappearing, because that would be a killer. We don't want that. We don't want negative impact. So yes, anticipated to be healthy. I don't know those numbers right now. I simply don't.
Awesome. Yeah, I mean the industry is there. I mean it's proven, and you guys is literally just taking the the market to Web3, or you call it Web 2 2.5. Because you guys still tapped into the Web 2, right? The Web 2 heavily, and I think it is. You're right that the Web 2, as far as real world assets go, it's from the Web 2, and yeah, it has a lot of potential. I think it does have a lot of potential, and I think if implemented correctly, seems like you guys have thought out the business model to the T. Uh, yeah, I mean, launching at 5 and it's a 90 billion market cap, so you guys do the math. It's yeah, it's a big. If you even get a little bit of share of that market, it's huge. It's huge, and I do like the fact that you guys are willing to eat less and give L more, right? And I think that model there, if scale with the right scalability, um, is enormous. Yeah, I mean everything looks good, Vishal. And I apologize. To be honest with you, Vishal, I think I just talked to my guy. My mic is actually not you, it's actually me. So I'm not sure what's going on. But I can still make out what you said. That was is just giving me a little difficult time trying to really digest what you said here. I'll tell you what, I will bring you back in for another AMA after launch, because yeah, I'm not sure. My computer's been acting up really bad on my side, and I thought it was you the whole time, but my guy was like, "No, it's you." So, but great presentation overall. The video is actually recorded, so after this, we will post over in YouTube as well. Um, yeah, looks good. Looks good, Vishal. I mean, I have nothing bad to say. I think the industry, I mean, the market is big. And like you said, I think with this market coming up here, and I think going forward as the crypto space evolve, you will see that a lot of people is gonna bring their real world business into the Web3. And I think you picked the right industry here. It's a huge, huge market. Very straightforward. Um, I think we covered pretty much everything here. Did we miss anything?
Not from my end. I could talk about theses and opportunity as much as anybody wants, but if any questions, let me know. Happy to answer them.
Yeah, let's talk about that. Let's talk about the VCs and opportunity. Where are we at right now? And you said that you guys funded the majority of the funds for the project, but can we speak on how much were you able to raise privately?
Yeah, so I mean, look, out of full transparency, we raised 800K from the Polygon and the senior guys there, and that's not the majority of the spend. So you could imagine what we put into it, right? Because we've got 10x engineers on this team. Kind of literally, look, we could launch this project at 50 million and it still have a lot of reception because it's justified based on the cost, based on the moats, based on the strategy, and based on our execution. And we're going at 5, literally not because we're worth 5, but because you know for the reasons I kind of spoke about, right? So that's you know that's it. But you should see that reacting.
Yeah, definitely. And I love the fact that you guys decided to launch it in a smaller market cap because there's potential to grow, right? Instead of 12, you guys doing it at 5. And again, that's also with 12-month cliff, guys. I guess the Fathom team is they're gonna have a longer vesting period too. So that's a good assurance there. Okay. Yeah, and this is gonna be what chain is this gonna be on?
We're launching on Ethereum. Most utility tokens still kind of go on Ethereum. It makes sense. Look, we could go down to, we could settle on an L2 if, batch transactions makes, if you're still expensive or whatever. It doesn't make any sense to do that yet, but that's a fairly easy exercise. Eventually we'll be cross-chain, chain agnostic really. It's just that ETH is the natural domain for utility still.
I mean, I love the Ethereum. That's not going away. I know the transaction fees are kind of high there, but hey, you don't get a lot of geeks like other chain like Solana, etc. Now, Solana, yeah, I love Ethereum, and actually the market actually lately, Ethereum shows that it's gonna. It seems like it's gonna really hit its all-time high very soon here. Yeah, let's talk about the VC. So what the VC's opportunities that you kind of alluded to there? What are you thinking?
I mean, yeah, I mean, look, look, what is the primary objective here, right? The primary objective here is to build support, right? Build support from people that get the project, that people that love the endeavor, that people that want to, be vocal about it, that that want to get the message out and are willing to put skin in the game. I don't know what that looks like. We haven't really, and apologies, I think I misconveyed. I said the word VCs, and I think it came off as VCs. But in terms of VC opportunity, like, I don't know, but we've not entertained it, like, because we've not needed to, and blessed enough not to. But the idea is that whatever we engage with, I'm very mindful that whoever comes in isn't destroying the project, right? Like this is beyond simply I buy at 2 and I sell at 5. That this is that lottery ticket. If you're going to align yourself with something, this is it, for at least from our perspective. So we're mindful that whoever is engaging, we understand that they love it for the right reasons, and then that's a discussion we're open to.
Sounds good. So yeah, I mean, if you guys are listening right now, this is something that you guys sounds interesting to you. Shoot Vashon a DM, or you can DM me as well. And we do have a group that do listen to projects like these here, and we'll follow up. We'll follow up after this. Yeah, Vashon, great presentation. I apologize. I meant certain part I couldn't even hear you, and I guess it's my computer. So I'll tell you what, I would love for you to come back in. It's on us for another AMA right after you guys launch, okay?
Lovely. Look forward to it.
Yes. Yeah, let's do it. Let's do it. Okay, yeah, sounds good, Vashon. I think great presentation. I think you speak very well. Even though I can hardly hear you. But yeah, let's come back and yeah, if there's nothing you want to speak on about more, and we can go ahead and wrap this up, and we'll see you a week and a half from now.
Lovely. Thank you so much for having me. Speak soon.
Yeah, thank you so much, Vashon. Take care. All right, guys. Hey, I apologize. I feel a little disconnected there. I thought it was actually his mic, but it's actually my microphone. I feel so disconnected. I was trying to make out what he said, and I didn't want to, ask the same question what he just spoke on, and it was yeah. I guess next time I just have to restart my computer ahead of time. So, you still there, Mike?
Yes, I am. Yep.
Yeah, the funny thing is, Mike, how come like when you speak, I can hear you perfectly clear, but when I couldn't hear him at all. I feel like I only could hear like 25% of what he said the whole time.
I think there was parts of it there too where he would speak a little bit too fast and it wasn't articulated too well. It kind of definitely came in and out. I don't think it was 100% you on your end, brother. A few times it was kind of hard to hear the ends of his sentences. It might have been his microphone. I don't know if he had a headset on or if it was a distance to his microphone thing, but we'll definitely try to adjust that before the next time he comes in about a week and a half, hopefully.
Yeah, so I definitely my phone, because even you now too, like you will like I hear the beginning, then towards the end it's like like that. Yeah, and yeah, so it's definitely my speaker somehow. Because last time I remember now, on the last AMA, I think I did the same thing. And I had to restart my computer, and it came in, and it was perfect.
Right.
So
yeah.
Oh man, I feel so disconnected. I'm not gonna lie, for that AMA, because I didn't know what he said, and I didn't want to repeat and ask the same. asked the same question on what he just spoke on, and yeah. So it was. I felt like it was horrible, and I think we owe him another AMA, proper AMA. So, but I think the overall idea, I think it's a great idea. Yeah, I mean the market is big, right? 90 billion market cap, and the idea has been proven in real life. So they just literally bring this to the Web3, but at the same time still connects to the Web2 because of the rentals, right? And it just kind of allows people to rent properly, and he's willing to eat less margin on that, and and scale it up. I think that's the whole concept of it.
And give back.
Is that
Sure.
yeah, eat less and give back more. And the market is big enough, right? The rental market is big enough to do that, and it has proven in real life already. So yeah, guys, I'm gonna go ahead and wrap this up. We're not gonna pick a winner. Let's just do 2 random number in the TG for those who are here. Okay. Why don't you pick 2 numbers, Mike?
Sure.
And yeah. Sorry guys, and I couldn't go through the questions either. I just wanna that was actually a very bad AMA. It's the fact that I couldn't hear him, and so I'm not sure how it sounded like from you guys' perspective, but from my side, it was annoying. I was just trying to make up what he said and trying to, I don't know. It's just weird to me. It was really weird.
And when we unmute the room as well, give us your thoughts on that too. If it was maybe something on our end, or if you guys were hearing that as well.
Yeah. That's definitely me, because I'm hearing you going in and out too, Mike. Like
Oh,
literally,
okay.
yeah, it was definitely me. Anyway, I feel bad because these guys are well prepared for the AMA. They're launching next week. I'll reach out to them again and see if they want to come back in before the launch. So we own that one, at least. But the business model is very easy, guys. It's very straightforward, right? They're trying to rival Airbnb, 90 billion market. It's industry, so it's a huge industry. Launching at 5 million. Vesting period, so everyone's gonna be vested for at least 1 year, right? And they're using 25% of the revenue to buy back the rewards token and kick it back to the stakeholders. Now, one thing that I want you guys to clear on, that the stakeholders meaning the people who host and rent, etc., not necessarily the people who are buying to the token. So I was able to clarify that, so that's clear. But yeah, even though Banner says that they're launching in Q2, so the launch is actually next week, okay? Not at 12.5, it's around 5 million. So that's good info there. But guys, hey, thank you so much. Thank you so much for being here. I apologize if that AMA did not go well. From my end, I felt like it was so disconnected. Yeah, I couldn't hear a damn thing. So anyway, Mike, appreciate you, brother, like always. And let's wrap it up, huh? Let's do what? What should we do? Two random number over there.
We'll do 2 random numbers. Yeah. Let's do between 1 and 250 this time, and we'll do, because of 2 numbers, we'll do the same 5 guesses each for everybody. That should be good.
Okay, sounds good. Yep, 5 guesses each, 2 random numbers, and we will still pick a good question as well. I know there's a lot of questions there. I did not want to drag on this AMA because it was just, but I think we got the important part of it out. I think you guys are pretty much, and again, it's a pretty straightforward business model, right? So, but we'll get them back in again, and I think that's probably better for them anyway.
100%. All right, guys.
Sounds good. We'll see you guys in the room.
Peace.